Title: Navigating New Frontiers, AI Innovations, Investment Trends, and Global Market Dynamics. Introduction.
Welcome back to our podcast, where today's episode takes us high above the bustling heart of Chicago, a city renowned not just for its architectural marvels and deep dish pizza, but also as a cornerstone of global commodity markets. Today's episode, titled Navigating New Frontiers, AI Innovations, Investment Trends, and Global Market Dynamics, is brought to you from the comfort of a rented private jet, soaring over the iconic skyline and the sparkling waters of Lake Michigan. Isn't it, Max?
That's right. With Chicago's majestic skyline and the vast expanse of Lake Michigan beneath us, today's episode offers a spectacular vantage point for our deep dive into the world's financial and tech trends. From Microsoft's strategic AI initiatives to the shimmering allure of gold in the commodity markets, the dynamic pulse of Chicago perfectly complements our discussion on shaping industries and economies globally.
In each episode, we aim to unravel how these developments impact not just the industry giants, but also the everyday investor and the broader economic landscapes. From the power centers of global finance affecting tech investments to the trading floors here in Chicago influencing commodity prices, this episode is packed with insights.
Our lineup includes a look at the latest AI breakthroughs transforming businesses, shifts in investment strategies as market dynamics evolve, and an analysis of major corporations navigating the future of the financial world.
So whether you're an investor, a tech enthusiast, or someone keen on understanding the forces shaping our world, stay tuned. Let's dive into these complex topics with the clarity and depth they deserve. Ready to kick things off?
Let's get started. It's going to be an enlightening journey from high above Chicago and the beautiful Lake Michigan. Chapter 1: AI Developments. This chapter explores significant AI advancements within Microsoft's Windows and Azure platforms, emphasizing their impact on technology and finance sectors. The integration of new AI features is boosting user productivity and enhancing creative and analytical capabilities across various applications. Windows 11 introduces several AI-powered enhancements that transform user interaction with devices. A key innovation is Microsoft Copilot. This AI companion assists users efficiently and creatively, integrated directly into the Windows taskbar for easy accessibility. Applications like Paint and Photos have also been upgraded with AI functionalities. Paint now includes advanced editing tools, allowing users to manipulate images with professional ease. Meanwhile, the Photos app offers features such as background blur and enhanced search capabilities, simplifying photo management. On the Azure side, Microsoft continues to expand its AI capabilities to support robust and efficient business operations. Enhancements include more powerful virtual machines designed to handle complex AI workloads. These facilitate everything from data analysis to machine learning processes. Azure's development tools and environments are optimized to support high-performance computing and AI applications, making it a leading platform for enterprise innovation. These developments across Windows and Azure pave the way for more intuitive and powerful user experiences, showcasing Microsoft's commitment to integrating AI across its product suite to foster productivity and innovation. Let's dive into some common questions for Chapter 1: AI Developments.
With all these updates in Windows 11, how exactly does Microsoft Copilot enhance user productivity?
Microsoft Copilot is integrated directly into the Windows taskbar. It uses AI to assist with tasks across various applications, from generating email responses in Outlook to suggesting edits in Word. By automating routine tasks and offering real-time help, Copilot significantly reduces the time and effort users spend on daily tasks, allowing them to focus more on creative and complex problems.
That sounds incredibly useful. And what about the AI enhancements in applications like Paint and Photos? How do these improvements impact the user experience?
AI enhancements in Paint and Photos simplify many complex editing tasks. For instance, AI in Paint assists with advanced photo editing like background removal and layer management. In Photos, features like background blur and enhanced search capabilities allow users to edit photos more efficiently and find images quickly based on content or location, significantly improving usability and accessibility. Chapter 2, Impact of AI on Robo-Advisors and Quant Funds. In this chapter, we delve into how artificial intelligence is reshaping the landscape of financial advising and fund management, particularly through the advancements in robo-advisors and quantitative quant funds. Advancements in AI technologies for robo-advisors. Robo-advisors have transformed from simple automated portfolios to sophisticated platforms that use AI to provide personalized financial advice. These systems leverage machine learning algorithms to analyze vast amounts of data, including market trends and individual financial histories, to offer tailored investment strategies. For example, improvements in natural language processing allow these advisors to understand and process user queries with higher accuracy, making financial advice more accessible and user-friendly. Growth and innovation in quant funds. Quantitative funds, known for their reliance on quantitative analysis to make investment decisions, have significantly benefited from AI. These funds use complex mathematical models to predict market movements and identify trading opportunities. AI technologies enable these funds to process and analyze data at a scale and speed that human traders cannot match, leading to potentially higher returns and more robust risk management strategies. Impact on investors. For investors, the integration of AI into these financial tools means access to sophisticated investment strategies that were once exclusive to high-net-worth individuals or institutional investors. AI-driven robo-advisors can help individuals manage their investments with greater precision, offering recommendations based on predictive analytics that consider economic shifts, market conditions, and personal financial goals. Ethical and regulatory considerations. As AI becomes more entrenched in financial decision-making, ethical and regulatory considerations come to the forefront. Ensuring transparency in AI decision processes, protecting consumer data, and managing biases that could arise from AI algorithms are crucial challenges that need addressing. Regulators are increasingly focusing on these aspects to ensure that the deployment of AI in financial services remains both innovative and trustworthy. Looking ahead. The future of AI in financial advising and quant funds looks promising, with ongoing advancements in AI technology poised to further revolutionize these fields. As AI tools become more refined, they are expected to become more mainstream, providing more investors with access to high-quality, personalized financial advice and investment opportunities. This chapter aims to provide a comprehensive overview of how AI is currently being utilized in the financial sector and what it means for the future of investing. It highlights the significant benefits while also acknowledging the challenges and responsibilities that come with integrating AI into financial practices. Let's dive into some common questions for Chapter 2 on the impact of AI on robo-advisors and quant funds.
How is AI enhancing the capabilities of robo-advisors in today's financial markets?
AI has significantly improved robo-advisors by enabling them to analyze large datasets rapidly, understand complex market patterns, and tailor investment strategies to individual user profiles. This level of customization and precision in financial advice was once only available through human financial advisors. Now, AI-driven robo-advisors can offer personalized, data-backed advice at a fraction of the cost, making sophisticated investing tools accessible to a broader audience.
What advantages do AI-driven quant funds offer over traditional investment approaches?
Quant funds equipped with AI technologies have a distinct advantage due to their ability to process and analyze vast amounts of data in real time. This allows them to identify investment opportunities and market trends that might be invisible to human analysts. Moreover, AI can automate complex trading strategies, minimize errors, and optimize portfolio returns while managing risks more effectively, which is crucial in today's volatile market environment.
Are there any risks associated with relying heavily on AI for financial advising and fund management?
Certainly. While AI brings numerous benefits, it also introduces specific risks, such as over-reliance on algorithmic decision-making, which might not always account for unpredictable market behavior or rare events. Also, AI systems can propagate existing biases if not properly monitored. Therefore, maintaining a balanced approach that incorporates human oversight with AI capabilities is crucial for mitigating these risks.
How can investors ensure that they are using AI-driven financial tools ethically and responsibly?
Investors should look for platforms that prioritize transparency and ethical standards in their AI operations. This includes understanding how the algorithms work, what data is used, and how privacy is protected. Additionally, choosing companies that adhere to regulatory standards and actively work to eliminate biases in AI models can help ensure that the technology is used responsibly and ethically.
What should we expect from the future development of AI in financial advising and quant funds?
The future of AI in financial services is poised for more sophisticated integration. We're looking at advancements in predictive analytics, enhanced customer interfaces, and wider AI adoption across various financial institutions. AI is set to deeply transform market operations and investment management. Quant funds with AI capabilities are especially well positioned. They can process vast amounts of data in real time, spotting trends and opportunities that might elude traditional methods. Plus, their ability to adapt swiftly to market changes enhances their strategic advantage, providing a more dynamic and responsive investment approach. Chapter 3: AI's Impact on Financial Market Stability. This chapter explores the significant role of artificial intelligence, AI, in influencing the stability and dynamics of financial markets. With AI's increasing integration into financial systems, its impact is profound, reshaping how markets operate and how stakeholders manage risks and opportunities. Introduction to AI in financial markets. AI technologies are increasingly embedded in financial systems, where they perform complex functions ranging from high-frequency trading to risk assessment and customer service. These tools can process vast amounts of data at speeds unmatchable by human traders, leading to more efficient and potentially more stable markets. Enhancing market efficiency. AI contributes to market efficiency by enabling faster analysis and execution of trades. Automated trading systems can detect patterns and execute trades at the first hint of profitable conditions, often before human traders can react. This rapid response can help in maintaining liquidity and stabilizing prices by reducing the spread between the bid and ask prices. Volatility and risk considerations. While AI can enhance efficiency, it also poses risks of increased market volatility. Algorithms reacting to the same indicators can lead to sudden market movements and flash crashes. The 2010 flash crash, for example, was exacerbated by high-frequency trading algorithms. This chapter discusses the need for advanced monitoring and control systems to mitigate such risks. Regulatory and ethical implications. The chapter also delves into the regulatory challenges posed by AI in finance. As AI systems operate at unparalleled speeds and complexities, regulating these systems becomes more challenging. There is a growing call for transparency in AI operations to ensure they adhere to ethical standards, particularly concerning fairness and non-manipulation. Future outlook. Looking ahead, the chapter speculates on the future of AI in financial markets. It is likely that AI will lead to more sophisticated trading algorithms and risk management tools. The development of AI is expected to continue at a rapid pace, necessitating ongoing adjustments in regulatory frameworks to keep up with technological advances. Let's dive into some common questions for Chapter 3: AI's Impact on Financial Market Stability.
How does AI enhance the efficiency of financial markets?
AI enhances market efficiency by automating complex, data-driven decisions, enabling faster and more accurate trade executions. This helps in maintaining liquidity and stabilizing market prices by minimizing the spread between the buying and selling prices. Essentially, AI can process and analyze large volumes of data quickly, leading to more informed and timely trading decisions.
Can AI also increase market volatility? How significant is this risk?
Yes, AI can indeed increase market volatility, especially when multiple automated trading systems react simultaneously to market signals. This can lead to rapid selling or buying, causing sudden market fluctuations. The risk is significant as seen in past flash crashes, where algorithmic trading led to drastic price drops within minutes, underscoring the need for sophisticated risk management systems to mitigate such outcomes.
What are the regulatory challenges that come with the integration of AI in financial markets?
The main regulatory challenge is the complexity and opacity of AI algorithms, which can make it difficult for regulators to understand and monitor these systems effectively. Ensuring that AI operations are transparent and adhere to ethical standards is crucial. Regulators are increasingly focused on developing frameworks that can keep pace with the rapid advancement of AI technologies in finance.
Looking forward, what should we expect in terms of AI development in financial markets?
We should expect AI to become even more integral to financial markets, driving the development of more advanced trading algorithms and risk management tools. However, this will also require continuous updates to regulatory frameworks to ensure these technologies are used responsibly. The future of AI in finance will likely see a balance between innovation and regulation, aiming to harness the benefits of AI while safeguarding market integrity and investor interests.
Given these impacts, how should investors and financial institutions adapt?
Investors and financial institutions should focus on staying informed about the latest AI developments and their implications for market dynamics. Embracing AI tools for analysis and decision-making can provide strategic advantages, but it's equally important to invest in risk management capabilities that address the potential downsides of automated trading systems. Continuous education and adaptation are key to navigating the evolving landscape of AI in finance. Chapter 4: Microsoft's $1.5 billion investment in G42 and the growing US-China rift. In this chapter, we explore Microsoft's significant $1.5 billion investment in G42, an artificial intelligence company based in Abu Dhabi. This move is particularly noteworthy against the backdrop of escalating tensions between the US and China over technology and security. Strategic dimensions of the investment. Microsoft's investment in G42 is a strategic maneuver to strengthen its global AI capabilities and expand its influence in the Middle East. This investment reflects a broader strategy to diversify partnerships and reduce reliance on regions fraught with geopolitical tensions, especially China. G42, known for its advanced AI and cloud computing solutions, aligns with Microsoft's goals to lead in these technology sectors on a global scale. Navigating geopolitical tensions. The investment occurs amid growing US-China technological rifts, where the US expresses increasing concern over security risks posed by Chinese technological dominance. By investing in G42, Microsoft aligns itself with a company that has been shifting away from Chinese technologies in response to Western security concerns. This shift is significant as it not only helps G42 align more with Western standards, but also positions Microsoft as a pivotal player in a region strategically located between Western and Eastern technological spheres. Implications for global technology relations. This investment could set a precedent for how global tech companies navigate US-China tensions. It underscores the importance of developing robust tech alliances outside of China, potentially influencing how other companies structure their global investment and partnership strategies. Moreover, it highlights the growing importance of regional players like G42 that can serve as alternatives to Chinese tech companies. Impact on the tech industry and security. The collaboration between Microsoft and G42 is expected to foster innovations that comply with Western security standards, reducing the risk of sensitive technologies being exploited in geopolitical power plays. It also ensures that Microsoft can continue to innovate in AI without over-reliance on Chinese components or technology, which is becoming increasingly problematic amidst regulatory and security challenges. Looking forward. As we consider the future implications of this investment, it is clear that the tech industry is moving towards a more diversified and security-conscious investment landscape. This chapter not only sheds light on the strategic aspects of Microsoft's investment, but also on the broader implications for global tech dynamics in the face of US-China tensions. This comprehensive overview aims to provide insights into how corporate strategies, international politics, and market dynamics interplay to shape the future of global technology investments. Understanding these elements is crucial for stakeholders navigating the complexities of the tech industry today. By examining these strategic moves, investors and tech enthusiasts can gain a better understanding of the evolving landscape and how major players are positioning themselves for future growth and security in a rapidly changing world. Let's dive into some common questions for Chapter 4 on Microsoft's $1.5 billion investment in G42 and the growing US-China rift.
What are the strategic reasons behind Microsoft's significant investment in G42?
Microsoft's investment in G42 is strategically aimed at enhancing its AI capabilities and expanding its influence in the Middle East, diversifying its global partnerships away from geopolitical tensions, particularly those involving China. By collaborating with G42, Microsoft secures a foothold in a region that bridges Western and Eastern technology markets, ensuring a diverse and resilient technological advancement strategy.
How does this investment impact the global technology landscape amid US-China tensions?
This investment marks a significant shift in the global technology landscape by providing an alternative to Chinese technological collaboration. It reflects a broader trend where companies are seeking to mitigate risks associated with the US-China technological rift by forming alliances that align with geopolitical interests. This could influence other companies to reconsider their global partnership strategies, emphasizing security and geopolitical alignment.
What are the potential benefits for Microsoft and G42 from this partnership?
For Microsoft, the benefits include access to G42's innovative AI and cloud computing technologies, which can help drive Microsoft's product offerings and research capabilities forward. For G42, partnering with a global tech leader like Microsoft not only enhances its technological prowess, but also boosts its credibility and market reach globally. Together, they can push the boundaries of AI technology development while adhering to Western security standards.
What should tech companies consider when navigating similar geopolitical challenges?
Tech companies should carefully evaluate the geopolitical landscape and potential risks associated with their international partnerships. It's crucial to develop a balanced global strategy that considers both market opportunities and political risks. Companies should also strive to enhance their technological sovereignty by investing in or partnering with firms that align with their strategic and security interests, ensuring resilience against geopolitical shifts. Chapter 5: Economic Signals from Commodity Markets. This chapter explores how geopolitical tensions and other factors are influencing the prices of key commodities such as oil, gold, and silver, underscoring their importance as indicators of economic health during times of global uncertainty. Impact of geopolitical tensions on commodity prices. The ongoing conflicts, including the tensions between Israel and Iran and the protracted conflicts in Ukraine and Israel-Palestine, have significantly impacted global commodity markets. These tensions heighten uncertainty around the supply and transport of commodities, typically leading to increased prices as markets react to potential disruptions. Rising prices of oil, gold, and silver. Oil. On April 23, 2024, Brent crude oil was priced at $87.14 per barrel, reflecting global market conditions. West Texas Intermediate, WTI, crude oil stood at $81.55 per barrel. Gold. As of April 23, 2024, gold prices reached approximately $2,311.03 per ounce, reflecting its role as a safe haven asset amid financial market instability. Silver. On the same date, silver prices were around $28.87 per ounce, driven by its dual appeal as an investment and its industrial uses in sectors like electronics and renewable energy. Inflation concerns and market responses. With the rise in commodity prices, inflation concerns are intensifying, particularly in economies with high national debt levels such as the United States. This situation prompts market participants to turn to commodities as a hedge against inflation, further pushing their prices upward. Outlook and strategic considerations. The commodity markets are likely to remain volatile as geopolitical conflicts persist and economic uncertainties linger. Investors are encouraged to stay informed about these developments and may consider including commodities in a diversified investment strategy to mitigate risks related to inflation and geopolitical disturbances. This section now includes specific, recent commodity price data and contextualizes these figures within the broader economic and geopolitical landscape, offering actionable insights for investors concerned with current market conditions. Let's dive into some common questions for Chapter 5 on economic signals from commodity markets.
What factors are contributing to the recent changes in oil prices? Recent changes in oil prices, especially noted on April 23, 2024, with Brent crude at $87.14 per barrel and West Texas Intermediate, WTI crude oil at $81.55 per barrel, can be attributed to ongoing geopolitical tensions and supply fears. Conflicts like those in Ukraine and between Israel and Iran heighten concerns over potential disruptions in oil supply, driving prices up as markets react to the uncertainty. How does the change in gold and silver prices reflect the current economic climate? Gold and silver prices, with gold reaching around $2,311.03 per ounce and silver at $28.87 on April 23, 2024, typically rise during times of geopolitical tension and market volatility. They are considered safe haven assets, so investors flock to them when traditional investment avenues seem riskier. This trend is indicative of heightened investor anxiety and a protective move against potential economic instability. What are the implications of rising commodity prices for inflation, particularly in high-debt economies like the USA?
Rising commodity prices contribute directly to inflation, which is a growing concern for countries with significant debt levels, such as the USA. As the cost of raw materials like oil and precious metals increases, so does the cost of goods and services, potentially leading to a cycle of wage price inflation. This could prompt central banks to adjust monetary policies, affecting interest rates and economic growth.
Given these developments, how should investors approach commodity investments in the current market?
Investors should consider commodities as part of a diversified investment strategy, especially in the current climate of geopolitical unrest and economic uncertainty. Commodities can serve as a hedge against inflation and provide stability during volatile market periods. However, investors must stay informed about global events and be prepared to adjust their portfolios as market conditions change.
Are there any strategic moves investors can make to mitigate the risks associated with volatile commodity markets?
To mitigate risks in volatile commodity markets, investors should focus on a mix of short-term and long-term strategies. Short-term, they might leverage options or futures to hedge against price fluctuations. Long-term, investing in diversified commodity funds or ETFs can spread risk across different assets. Additionally, staying updated with reliable market analysis and geopolitical developments will enable more informed decision-making. Innovative business idea, commodity-linked investment app. Overview. Inspired by the trends and insights discussed from chapters 1 to 5, this business idea revolves around developing a mobile application that provides individual investors with easy access to commodity-linked investments, with a special focus on precious metals like gold, which are often seen as safe havens during economic uncertainties. Key features. Real-time market data. The app integrates real-time data and trends on commodity prices, especially focusing on gold, other precious metals, and strategically important commodities discussed in the podcast. This will help users make informed investment decisions based on the latest market dynamics. Educational resources, leveraging insights from the discussions about economic signals and market dynamics. The app offers educational content that helps users understand the factors affecting commodity prices and how these assets fit into a broader investment strategy. Custom investment strategies. Based on user risk profiles and investment goals, the app recommends customized commodity investment strategies. Whether the user is seeking to hedge against inflation, as suggested by the spikes in gold prices, or diversify their portfolio away from traditional stocks and bonds, the app provides tailored advice. Direct investment options. Users can directly invest in commodities through the app, which connects them to various commodity exchanges. Additionally, it offers options to invest in commodity ETFs and mutual funds that specialize in sectors like renewable energy, which is linked to the demand for specific commodities like copper. Interactive scenario planning tools, drawing on the analysis of potential Federal Reserve policy impacts on commodity markets. The app includes tools that allow users to simulate different economic scenarios, like rate cuts or geopolitical tensions, and see how these could affect their commodity investments. Market opportunity. This app taps into the growing interest among retail investors to include commodities in their investment portfolios, not just for returns, but also for portfolio diversification and protection against inflation and economic volatility. Given the increasing accessibility of investment tools and platforms, there is a significant opportunity to engage a demographic that is tech-savvy yet possibly new to commodity investing. Development and launch strategy. To develop this app, collaboration with financial analysts, commodity market experts, and app developers is essential. Initial funding could be sought through venture capital interested in fintech innovations or crowdfunding. A beta version could be launched to gather user feedback, with continuous iterations based on user data and market developments. Long-term vision. The long-term goal is to establish the app as a trusted platform for commodity investment, continuously adapting to market changes and expanding its features to include AI-driven predictive analytics, integration with personal finance management tools, and perhaps even branching into tokenized commodities to lower the entry barriers further for small-scale investors. This business idea not only caters to current market needs, but also aligns with the emerging trends in financial technology and investment behaviors discussed throughout the podcast episodes. Let's dive into some common questions for the innovative business idea on the commodity-linked investment app.
Max, how can this commodity-linked investment app be practically implemented in today's market?
Great question. To implement this app, the first step is to establish a robust framework that integrates real-time market data and analytics. This involves partnerships with financial data providers to ensure that the app has access to accurate and up-to-date commodity prices. The development team would need to include experts in both finance and technology to create a user-friendly interface that simplifies the complexity of commodity trading. Furthermore, securing regulatory approval is crucial, as the app will be dealing with financial investments.
What strategies should be employed to attract the first users to the app?
To attract initial users, the app could offer a trial period where users can access premium features for free. Educational content and webinars on commodity investing can also help in engaging users who might be new to this type of investment. Additionally, marketing efforts should focus on highlighting the app's unique features, such as customizable investment strategies and interactive scenario planning tools, which differentiate it from other investment platforms.
What are the potential challenges in developing this app, and how can they be addressed?
One of the main challenges will be ensuring the security and integrity of the financial transactions conducted through the app. This can be addressed by implementing advanced cybersecurity measures and ensuring compliance with financial regulations. Another challenge is the fluctuation of commodity prices, which can be mitigated by providing users with educational resources to understand market trends and make informed decisions. Lastly, maintaining up-to-date and accurate data will be essential, requiring reliable data feeds and continuous monitoring of market conditions.
How can the app remain competitive in a market with established financial tech companies?
The app can remain competitive by continuously innovating and adapting to new market trends. This could include integrating artificial intelligence to provide personalized investment advice or expanding into emerging markets with high growth potential. Regular updates to the app's features based on user feedback and market developments will also be crucial. Additionally, forming strategic partnerships with financial institutions or fintech companies could enhance the app's offerings and expand its user base.
Lastly, what is the long-term vision for this app in the evolving landscape of financial technology?
The long-term vision for the app is to become a leading platform for commodity investment, recognized for its user-centric design and comprehensive financial tools. As financial technology evolves, the app could incorporate blockchain technology for enhanced security and transparency in transactions. There is also potential to explore international markets, adapting the app to meet the specific investment needs and regulations of different regions. Ultimately, the goal is to empower investors by providing them with the tools and knowledge to successfully invest in commodities, regardless of their experience level. Stay connected.
As we wrap up today's insightful exploration of AI in finance, let's delve into the unique artworks that accompany our discussions. Max, there's more to these artworks than meets the eye, isn't there?
Absolutely. Our luxury conceptual digital art is not just a feast for the eyes, it's crafted with potential investment value in mind. Each piece is inspired by and linked to a specific chapter in our podcast, creating a unique narrative context that enhances its appeal. Drawing inspiration from the trajectory of Andy Warhol's iconic prints, which soared in value over time, we anticipate our artworks could similarly appreciate as digital and AI-influenced art gains broader recognition.
Warhol's work took some time to be fully appreciated, didn't it? How does that relate to our art?
That's right. Initially, Warhol's pop art faced skepticism and was met with mixed reactions. Some of his early works were priced modestly, often sold for a few $100s. Yet, over the years, these same pieces have appreciated enormously in value, with some reaching tens of millions at auctions. For instance, Warhol's 8 Elvises originally sold for $100,000 in the 1960s and later fetched over $100 million. We hope our art follows a similar trajectory, initially niche but growing in significance as the intersection of technology and luxury art becomes more mainstream.
And our listeners play a role in this as well, correct?
Indeed, they do. By engaging with our artwork on social media, especially on Twitter where we frequently post updates, our listeners help determine which pieces we feature. These popular selections are initially offered for sale on Etsy. Looking ahead, we're excited to announce plans for the Finance Frontier AI 2025 Art Collection, a future marketplace where these artworks will be traded like collector's cards. For truly standout pieces, we'll offer exclusive, limited edition artworks as NFTs, showcasing the best of our annual collections.
So, engagement from our listeners can influence which artworks are available?
Exactly. We encourage everyone to let us know if a particular piece captures their imagination. You can reach out through the contact form linked in our show notes or directly comment on our Twitter posts. This not only helps us gauge which artworks are most popular but also fosters a vibrant community around this innovative blend of art and technology.
For our listeners who want to dive deeper and stay ahead with the latest developments, what do you recommend, Max?
I strongly recommend subscribing to our AI Finance 5 newsletter. It's your weekly summary of the top 5 insights from our podcast, crafted to give you a leading edge in AI and finance. Just fill out the contact form linked in our show notes, and every Friday, you'll receive a concise overview of crucial developments directly in your inbox.
Fantastic! And for those who want to continue this discussion and not miss any of our episodes, where should they go?
To ensure you never miss an episode, subscribe to us on Apple Podcasts or Spotify. Your subscription helps us climb the charts and reach more listeners, expanding our community of tech-savvy investors. Plus, it's the best way to stay updated with our latest episodes and the evolving world of AI and finance.
Speaking of engagement, we've had some intriguing questions come in from our last episode about navigating AI in financial markets. Here's one from a listener. How can small investors apply AI in their investment strategies without significant capital?
That's an excellent question. Small investors can start by utilizing AI-driven Robo-Advisors, which provide cost-effective investment management and are accessible to individuals with smaller capital. These platforms use algorithms to optimize a portfolio based on the user's risk tolerance and investment goals.
And another listener asked, with AI changing the investment landscape, what should traditional investors learn to stay relevant?
Traditional investors should focus on understanding the basics of AI and its applications in the financial sector. They don't need to become tech experts, but should know enough to critically evaluate AI investment tools and strategies. Keeping up with educational resources like our podcast can help bridge this knowledge gap.
Thank you to everyone who has joined us on this journey. Your curiosity and engagement are what drive us forward. Stay connected, keep exploring, and together, let's uncover the future of technology and finance.
Disclaimer and acknowledgements. This content is for educational purposes only and is not intended as financial or legal advice. We thank sources such as Bloomberg, Reuters, CNBC, Forbes, Financial Times, The Wall Street Journal, Science Daily, and Investing.com for their contributions to the field, which inspire our discussions. Copyright 2024 Max Vanguard. All rights reserved.